The Banking Scene Director's Cut goes behind the scenes, sharing stories and insights to help you build the bank of tomorrow.
This is our third webinar, and actually the third time that we're kind of playing with the concept. So the very first time, it was in January, with the first session on fraud with a special guest. Then the second was 2 weeks ago, where we organized an interactive session, Chattermas Rules. So we decided not to publish that. That was an AI quiz show with Chris Skinner. Now this one is slightly different. For the first time, the banking scene will actually share their own research results. And that's why you are here. That's why we are here. Andrew, he worked the past quarter on a research based on interviews, desk research, etc., on fraud, to give our own vision of where it is going, and more specifically also on the Benelux region, because that's of course where the banking scene is feels most comfortable. That's where we have our conferences, where we hold our meetups, and where our network is. The banking scene is a network organization helping to connect organizations and people, helping to shape the bank of tomorrow. Mostly known for our conferences, as is this year also webinars every once in a while. We played with the format. That also means that every once in a while we change the rules of the game. And Andrew had another look at how we can best work with interaction if desired, but still perhaps publish part of the recordings.
Okay, so this is the highlights from the white paper. The white paper is full of links to my source articles, which may be third-party reports or our own events. We have found that because fraud is a touchy subject, many of the bankers that we spoke to do not want to be attributed. They want to remain anonymous. So they were happy to share their insights in our roundtables, in our think tanks events, and in casual ad hoc conversations where we got really strong insights for them, but they said, look, this is a very touchy subject for us at our organization. Please do not attribute it to my organization or just leave my name out of it. So that was just a small disclaimer before we go. Structure of the white paper, it's very simple. I cover the impact of verification of payee and instant payments regulation, then look at the shift from technological attacks to now the human layer that's under attack, briefly look at what the new trust stack looks like. I included this time around crypto and tokenization fraud, simply because stable coins and crypto assets have become a really hot topic over the last 12 months, and they're becoming more mainstream as well. So I specifically dived into a little bit around what crypto and tokenization fraud looks like and how MiCA might be helping with that. Then look at one of the strongest trends that we have come up with, that we have identified, which is convergence of fraud, AML, and cybercrime teams. And then I give you a small conclusion at the end. So to start with, the impact of verification of payee and instant payments regulation. So when Rik said that we held an earlier webinar at the beginning of this quarter, and we had asked our audience what their thoughts were on the implementation of instant payments. And nearly half of them said there's been a significant increase in fraud. They were directly attributing that to instant payments. Now, the problem is, obviously, customers have been expecting everything to be instant. We've known this for a long while. This is very much not necessarily a generational thing. Everybody is conditioned and groomed to wanting everything instant. The trouble is that also means fraud detection needs to be instant. Window to detect a fraud has decreased substantially, and fraudsters have weaponized that. They have weaponized the lack of that cooling off period, the lack of that pause. And they are using instant payments regulation to their advantage, and your fraud systems, most banks' fraud systems, are really struggling. So a comment that came out of our first roundtable that we had run around the topic of fraud was instant payments equals instant fraud. And that was a recurring theme that came up repeatedly across our research, that people were saying this is really putting pressure on fraud teams to be able to detect the frauds instantly. And the general consensus is that some friction needs to be added back, but there's a very careful balance here
And
because yeah.
yeah, and I like to add to that because earlier this week, even a representative from the labor organizations was calling for a reintroduction, a reevaluation of the instant payments regulation exactly because of that. Perhaps to put the limits much lower, where instant payments is mandatory, or leave more customers the choice whether they like to take instant or not. Exactly, the reintroduction of intelligent friction, not just asked by banks, but also organizations who represent customers and consumers.
Oh, that's very interesting. Thanks for that anecdote. I didn't know that. And the trouble is, or not the trouble, it seems to be a little bit compounded. So verification of payee, it is quite relatively new, relatively in the grander scheme of things as far as regulation goes. It's still early days, but we're getting this feedback that it could be providing a false sense of security, both for customers and also potentially for banks. And we had on our previous webinar, one of our attendees had brought a case to our attention that after he had brought it to us, we actually saw that, and I found that same fraud typology repeated in a number of the analyst reports that I used in my desk research. And that is where criminals are setting up fake mule accounts, or they are enlisting mules to send invoices claiming to be collecting money on behalf of, let's say, your electricity company or on behalf of your telephone provider. That is something quite common, apparently, particularly across Belgium. And the problem then is that the victim, the recipient of this, they put in the IBAN number that's been provided by this fake agency because they believe the agency is true. And because the IBAN number is genuine, it's real, it belongs to a real fake person, verification of payee gives a green light. And then because of that match, the transaction gets processed, and as far as the bank is concerned, everything's okay because VOP matched. Now, there has been a disturbing rise of youth mules across the Benelux region with no prior criminal history. So this has been made it very, very difficult for banks to detect the fake accounts. And again, verification of payee, what they're seeing is a genuine account with a genuine person. They think it's a genuine transaction. And this is leading to this, excuse my naivety for you fraud professionals who are listening, MLOS, money laundering as a service. This was a new acronym for me. Yes, Rik.
Yeah, I have an interesting anecdote there. I
Mm.
read, I think it was at Newsblad or Last News 2 weeks ago, where they had an interview with the criminals, the youth, the mules, or the entire organization. And what I found interesting is that they didn't really felt very guilty about the fact that they were stealing money because they assumed that the bank would pay the money back anyway. So their reasoning was, we're not stealing from these consumers, we're actually stealing from the bank.
And they thought that's okay, is it?
They didn't mind that. Yeah.
So
It
they
was
didn't
more
mind.
okay than stealing from old people.
I was going to say it's sticking it to the man, as the
Yeah.
Americans would say, kind of a thing. So this has made it very, very difficult and compounded by PEPL. And Rik, I think that you've been having some challenges with getting invoices in and out of various systems and into
Yeah.
PEPL.
Yeah, a little bit.
And one of the warnings and cautions is that apparently it's quite easy to set up as a supplier to feed invoices into PEPL, and the due diligence around the organizations that are feeding invoices in is maybe not quite as robust as it needs to be in the future.
And that was something that you got from Isabel, wasn't it? Just to make sure,
Correct.
like, it's not just an apparent, it's not a gut feeling from someone who has never used PEPL, but it's actually pretty hard evidence from people who know what they're talking about.
Correct. And we do
Yeah.
reference that in the white paper, where they're seeing this, where organizations are feeding invoices at scale through the PEPL network. And even if just a small percentage of those gets through, the fraud is compounded incredibly. So verification of payee, not the silver bullet that people thought that it was going to be, and I haven't included the chart on here. In our previous webinar, the fraud professionals who were on there was sort of 50-50 split. Half of them believe that verification of payee IBAN name checking has decreased fraud. Others have said the other half was saying it's had no impact whatsoever. I'd actually be quite interested to hear what the people on here would think about. Actually, I should have made that a poll, but I didn't. But jumping on in the interest of time into the next thing. Fraud, a lot of fraud used to be committed historically through technical breaches and through people using technology to break into systems, get details and that kind of a thing. Fraud has shifted overwhelmingly towards people being the thing under attack. People are the weakest point in the entire fraud chain. And this has been the biggest weakness here, has been the industrialization of social engineering. Deep fakes and AI have been embraced as the fraudster's weapon of choice. Gen AI has lowered the barrier to entry for fraud. Again, another acronym. Crime as a service. Yuri Abraham from GASA, the founder of the Global Anti-Scam Alliance, had said literally, you don't have to set up a fraud network anymore. You can rent somebody else's fraud network where they've already got AI doing all sorts of things, maybe sending out fake messages and fake emails. This was a shocker to me. OpenAI, they have not released this for general release. However, OpenAI claim that with just 15 seconds of public audio, so just a fraction of what I've already been talking, they can clone a person's voice sufficiently to be passable. There are professional services that you can sign up to for, 10 euros a month, that if you put an hour of your own audio up, so if I took a whole lot of our podcasts and I uploaded, I could create a perfect high fidelity clone of Rik and Andrew. And we wouldn't even need to do this anymore. We'd just feed them a whole script and they'd be able to do it.
Don't bring me any new ideas, Andrew. But what I want to share is that it's actually quite impressive how fast these things have evolved. I remember a year for last year's conference, 2025, Brussels, I got an explicit request from one of the big four banks fraud people um, asking, can you bring the industrialization of social engineering and the risks of that on the agenda? So we went explicitly looking for a speaker, and that was for the conference in May 2025. Today, that is a concrete risk with a very concrete industrialization going on. So yeah, it's only in a year time that we go from a fear of having it to actually having it.
Well, the other thing that Yori had brought up was that fake phishing emails. Now, we all think we can spot a phishing email, right? Fake emails have now become so detailed, the communication so good, you can't pick it up just by a simple, yeah, that spelling is bad or that grammar is bad. That GASA is now reporting a 54% click-through rate on phishing emails. That is a staggering number. And the EBA has reported that APP scams, so authorized push payment scams, account for around 74% of the total value of fraud in the last year. So the victims are usually victims of psychological coercions. They get sent emails, to say something like, we've got access to all of your contacts on your computer, and we're going to send them an email telling them that you've looked at porn, whether you've looked at porn or not, and this is going to ruin your reputation. Otherwise, you need to pay us some money. And the people get so scared that they quickly send a transaction through. And the trouble is, the bank sees a legitimate customer. They see a legitimate customer trying to do something. It's a one-off thing, and they think it's legitimate. So the bank doesn't do anything or can't do anything to prevent this. And fraudsters are using AI at scale now to scale out all the old scams, the romance scams and the pig butchering scams and the, I wouldn't say the
Was it
fake
pig butchering
Nigerian
scam?
pig butchering scam is when they fatten somebody up. It's usually crypto related, when they give people the promise of a high return for an investment. And what they often do is they get the person to invest a low amount of money, and then they give them a fantastic return. They don't actually give it to them, but they fake say to them, oh, you earned a 30% return in only 7 days. Why don't you put more money in? And they fatten them until they take them for a big amount of money, tens of thousands of euros very often. And this was a very specific stat that came out of the AFM in the Netherlands. This was they were calling it the iceberg, the tip of the iceberg, where only, I'm saying only, it's still a big amount, 75 million euros of total losses were registered to the police in 2024 by people who got scammed. However, the police estimate by extrapolation that that is underreported, and that the true scale of the scams and fraud is more like 50 million. And that's just for the Netherlands. Now, we dug into a little bit about the reasons. One of the biggest reasons why people don't report scams is that they don't believe that it will have any impact. And they certainly don't want to get the police involved. So they don't do anything. Apathy. They just don't report it. Another big psychological reason is shame. They are embarrassed about the fact that they fell for a scam, so they don't report it. The problem is compounded when by recovery fraud. So recovery scam, should I say, when the scammers contact the people who are being scammed and they say, oh my goodness, we hear that you've been scammed. We can get your money back for you. It will only cost you 10% of the amount that you were scammed. Here, you need to pay this. Now, slight diversion and anecdote. I got a call on Sunday. I was mowing the lawn and I get a call from one of my sisters in South Africa that says, I need you to speak to a friend of mine. She has been scammed and she's now in a conversation with an agent that's promising to get all her money back. And I went, no, 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 no. And she said, yes, this is really urgent. She's having problems installing the remote desktop software at the moment. I went, no, please, literally a real live of this happening. And she put her friend on the phone. I said, disconnect the call, unplug your computer, shut it down. Do not install that remote help desk software. Because if you do, you will lose everything. They will take over your computer. They will get access to your bank accounts. And these recovery fraud scams are huge. So what's the strategy to try and prevent this? The trouble is that the bank is only the last bit. The transaction's the last bit of the fraud. The fraud starts way before the transaction. And fraud teams are beginning to use this shift left strategy. And again, this came out of one of our one-to-one interviews. However, I saw it repeatedly used, that exact term, shift left, in a number of analyst reports. I think Accenture and Deloitte both referred to it. And that's all about the bank needing to get involved earlier on. And how? How does a bank do that? One of the things that has been suggested, and some of the banks are already doing, is they will use device fingerprinting, and they will use behavioral biometric analysis to see on the device what is happening at the time of a transaction. So, for example, if there is a transaction in progress that they can detect a customer is trying to make a transaction, but they can see that while the customer is trying to make that transaction, they simultaneously have a telephone call live. That is a very common trick of a scammer. The scammer will have them on the phone and they'll say, keep me on the phone and you need to go to your bank and I will tell you exactly what to do. That immediately is a red flag. It stops the fraud before it happens. So
How do
banks,
you do that at scale?
AI. It's all being done with AI, and the bank apps are getting this kind of a capability embedded within them, where they will look for the user behavior. What does a person normally do before they go to their bank account? What has the previous actions been? How fast is the user typing? Can we detect anything about their state? They're getting more and more sophisticated methodologies, and there's more of that in the white paper as well. I realize I'm taking far too much time, so I'm going to
Been
move
there
on
to tell you.
even faster. So briefly, the trust stack and digital identity. There is, I'm going to use the cop out that a picture is worth 1,000 words, right? Because you are very lucky. I'm in the UK. I don't have the benefit of digital ID or ID wallets or anything like that.
Even more,
But
the UK is very much against it, the consumers at least.
and I don't know why. Please do not put me in with those consumers. I'm one of the ones that says, please, I would love to have the convenience of something like It's Me or any of the other, digital ID wallets that are coming out. However, there is a gap that has been identified in there, is that while we are strengthening the pillar around the consumer with digital IDs, there is very much a lack of identity verification for corporates. So corporate identity companies need to be verified or have a verifiable ID that is akin to, that can be compared to consumer ID.
As for Apple, should be part of the solution.
Well, it should be, but at the moment, Peppel is
Challenges.
facilitating it. Privacy preserving data sharing. Again, strong point raised by a number of agencies and already in place in a number of places in the world. But the Benelux region, and specifically, I think, Belgium more than most, are sort of caught in this GDPR trap. where they're saying we can't share because of GDPR. And there was a strong comment from Yori to say that is not actually founded in reality, that GDPR doesn't specifically exclude data from being shared.
I think it has to do with the national translation of GDPR.
And that's something that we came across again very vocal in our think tank dinners, where the people around the table, all of the fraud professionals, want to be able to collaborate. But all of them unanimously were saying, but our compliance department won't allow us to because of GDPR. So there's work to be done there, and I believe I'm going to get the acronym wrong. Is it AMLAS? The anti-money laundering service. That's at least a.
And we'll also give an introduction speech at our conference in Brussels.
I was hoping you would pick up on that. Now, and then finally, AI. AI is something that fraud teams can't do without these days, purely because of the volume of alerts, and to try and flatten the false positives, they need to use AI. However, it's very important to be explainable, and there are some use cases very specifically where human in the loop remains critical, at least for now, to prevent the automation bias that some people have seen. So we've had some reports of people implementing AI and then having to wind it back and then shifting that needle and finding where the human in the loop needs to be and how that needs to be done in order to comply with regulation, because every decision that you make has to be explainable. And I did already say fraud teams are being overwhelmed because of the sheer volume, because the fraudsters are deploying AI. We had presentation at the Banking Scene Art Night from XCN Cognitive Security, where his strong message was, you need AI to fight AI, but be aware of the limitations and remember where you need the human in the loop, at least for now. I said to you that I had a look at crypto and tokenization fraud. I'm a little bit negatively biased because I've never been a cryptocurrency fan. However, tokenized assets are something that I really do believe are a genuine, legitimate investment, and people are benefiting from the ability to be able to have fractional ownership of high value assets. It's an entire industry, and it's a really strong topic for this year in the financial services industry. So digging into MiCA, well, firstly, just in the whole cryptocurrency space, what maybe it shouldn't have surprised me, but the crypto space is subject to exactly the same fraud typologies as fiat. It's exactly the same. There is no difference. There are romance scams, investment scams, however, investment scams are the biggest. And in the 6 months only, July to December, Belgian consumers lost 9.5 million euros just to one particular WhatsApp cryptocurrency scam. That was covered.
I think it's a serious underestimation of what's actually happening today.
I mean, when I said you've got the same kind of a fraud typologies and scams, and I'd said things like rug pulls, which is where they have fake crypto investment schemes and things like that. We've also seen that with MiCA. MiCA has provided this really, really strong shield around the CASPs, the crypto asset service providers. They've got really strong regulation that they have to comply with. One of my interviews was with Zodiac Custody, and they were explaining the lengths to which they have gone, not just to conform with MiCA, they completely compliant with the MiCA regulation, but they have had to battle against the same kind of vectors of attack. one of them being AI and fake phishing emails. People trying to get to the tokenized assets. Zodia Custody is an institutional custody provider. So they're not talking about retail level of investments. They're talking about institutional level of investment. So we're talking about millions of euros. So therefore they are a big target. But it surprised me that the attacks at the moment have been relatively unsophisticated, exactly the same as fiat currency. There are phishing emails. There are voice cloning. There are videos, fake videos, that kind of a thing.
Pig
Perhaps
butchering.
pig butchering, but
I actually have a friend who got pig butchered through this kind of construct.
really,
They all have somewhere. They may not be vocal about it, but
I've never gone anywhere near crypto, so I can happily say I haven't been butchered yet.
not you,
Not
but maybe your friends.
quite possibly, my friends. The positive was MiCA is a really good bit of regulation and seems to be helping shine the light and legitimizing the crypto asset space rather rapidly, actually. It's also pushing the fraud to unregulated crypto, which is forcing those institutions now to voluntarily become regulated so that they're falling under the same umbrella because the fraud seems to be going on there. There's one of the things that is very common in the crypto space is what's known as the stablecoin sandwich, where a common bit of fraud, people are encouraged to convert their fiat into crypto. Once it's converted into crypto, it's then pushed into an unhosted wallet, which breaks the chain of traceability. And from the unhosted wallet, it then disappears into the system and is cashed out back again as fiat. So it starts as fiat, ends as fiat, but in the middle, crypto acts as a way to obfuscate everything. Under MiCA, that can't happen because the full chain of custody has to be kept fully transparent the whole way through, verifiable credentials. Every single transaction has to be verifiable, explainable, and transparent. So look forward to more organizations falling under the MiCA regulation. And if you are going to invest in anything, make sure it is one of the CASPs that falls under MiCA regulation.
5 minutes
I did,
left, Andrew.
yes,
Sorry, 10 minutes over time.
I did say a very strong thing that is happening is convergence. Convergence of fraud teams. We are seeing that in the old legacy silos. We had cybersecurity, fraud, and anti-money laundering as separate silos within the bank. Now we are seeing a rapid switch to one strategic, unified financial intelligence hub, a Fincrime hub that has got full visibility, no silos. And we are also seeing that regulators are pushing towards this kind of view of they're not accepting any excuses of an internal silo causing a breakdown or resulting in a fraud. What's the conclusion? Okay, so I'm going to rapidly run through these. You can rather read them in depth. In the paper itself, treats cyber fraud as a core financial risk. I was actually on a board meeting last night for a bank, and cyber fraud was their number one priority as a core financial risk. I have to say it is a bank that is in Jamaica, so maybe that isn't a surprise to some people. Cultivate a culture of cyber fraud awareness. It is surprising how many people in organizations still aren't that alert to the common fraud and scams. Strengthen your digital onboarding, implement strategic and dynamic friction, modernize your investigation with AI co-pilots, and deploy AI-driven RegTech and network analytics. In summary, borderless fraud requires borderless defenses. And this is a quote from John Pitts at Plaid, who really sums up the essence of this whole research effort for me when he says fraud is a collective team sport. And I think this is the way that we need to be viewing it in the future across the fraud ecosystem. And with that, I'm going to stop presenting, stop talking, and we will now end the formal part of the Banking Scene Director's Cut recording.